Bismillahirrahmanirrahim. This is the second video on accounting for healthcare organizations. We will solve an exercise on generalizing transactions of a not-for-profit or hospital. We will solve an exercise on recording transactions on receipt and use of contributions by a not-for-profit hospital. We will also solve an exercise on reporting patient service revenues. We will explain how to determine the amount of net patient service revenue that the hospital will report on its operating statement. We will also explain how to determine the amount of net patient accounts receivable the hospital will report on its balance sheet and how to estimate and report the third party payer settlements and charities. Finally, we will solve an exercise on how to record journal entries, prepare a statement of operations, a statement of changes in net assets, and finally, how to prepare a balance sheet. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who have joined the governmental or not-for-profit organization and want to refresh their learning on accounting for healthcare organizations. A special word of thanks to my colleague Ms. Maha Al-Malki, who spared time to discuss the final draft of this video. So let us start with solving an exercise on generalizing transactions for healthcare organizations. Now, prepare the journal entries to record the following transactions. The hospital billed its patient 250,000. So patient account receivable is debit by 250,000 and patient service revenue is credit by 250,000. Then nurses and doctors employed by the hospital were paid 100,000 and we record this as patient care expense debit by 100,000 and cash is credit by 100,000. Then the chief administrative officer was paid her salary of 10,000. So administrative service expense are debit by 10 and cash is credit by 10. You can note that in the case of healthcare organizations, we don't simply record accounts receivable, but patient account receivable. We don't record service revenue, rather we record it as patient service revenue. We don't say salaries, we say patient care expense. We don't say salary for chief administrative officer, rather we say administrative services expense. So these are the things we need to take care when we are recording general transactions in the case of healthcare organizations. Then the hospital paid its utility bill of 5,000. So general service expense is debit by 5,000 and cash is credit by 5,000. Then we have depreciation on the equipment for 34,000. Depreciation expense is debit and accumulated depreciation is credit. Then several adults donated their time worth $5,000. selling merchandise in the hospital gift shop. So we are not going to record this transaction as these services do not require specialized skills. Then the hospital billed Medicare 100,000 for services provided at its established rate. So patient account receivable is debit by 100,000 and patient service revenue is credited by 100,000. Then the prospective billing arrangement gives Medicare a 40% discount. So we have to make a provision for 40%, and 40% of 100,000 will be 40,000. So provision for contractual adjustment is debit by 40,000 and patient account receivable is credited by 40,000. Then a unrestricted donation of 4,000 was received. So we are receiving cash. So cash is debit by 4,000 and other revenues or gains unrestricted support is credited by 4,000. Next, let us solve an exercise on generalizing transactions for net patient service revenue. Rubyrath Hospital had the following transactions during the year ended December 31. Prepare journal entries to record these transactions and state the amount that Rubyrath Hospital would report on its net patient service revenue. So the hospital provided services to patients insured by third party amounting to 5 million at its established billing rate. So we have patient account receivable debit by 5 million and patient service revenue is credited by 5 million. The hospital's prospective billing arrangement with this third party stipulates payment to the hospital of 70%. That means we need to make a provision of 30% on this 5 million. So 30% of 5 million is 1.5 million. So provision for contractual adjustment is debit by 1.5 million and patient accounts receivable is credited by 1.5 million. Then all billings were paid during the year. So cash is debit and we are going to get 70% of this 50 million. So 70% of 50 million is 3.5 million. Okay. Then we have the hospital provided services to patient insured by third payer B amounting to 3 million at its established billing rate. So once again, patient account receivable is debit by 3 million and patient service revenue is credited by 3 million. Its retrospective billing arrangement with this third party stipulates that the hospital should receive at an interim rate of 90% of its established rate, subject to retrospective adjustment based on agreed upon allowable cost. So we are going to receive 90%. That means we need to make a provision of 10% on 3 million, and 10% on 3 million is going to be 300,000. So provision is debit by 3 million by 300,000 and patient account receivable is credited by 300,000. Then by year end, B has paid all the billing before issuing its financial statement. The hospital B has paid all the billings. That means we have received the money and we are going to receive 90% of 3 million. So 90% of 3 million is 2.7 million. Sorry. So cash is debit by 2.7 million and patient account receivable is credited by 2.7 million. We move on to transaction and then before issuing its financial statement, the hospital estimated that it would need to refund 250,000 to B. So we are refunding 200 based on allowable cost. So we haven't made it yet, but we are going to refund this money. So provision for contractual adjustment is debit by 250,000, and estimated third party settlement is going to be credited by 250,000. Then we go to number 3. The hospital provided services to charity patient amounting to 1 million. So patient account receivable is debit by 1 million, and patient service revenue is credited by 1 million. And then, because these are charity patients, so we have to make a provision for the whole amount of 1 million. Provision for charity services debit, and patient accounts receivable is credited by 1 million. Okay. So that is how we are going to record the journal entries, and let us see how we are going to determine the net patient service revenue. So first of all, we look into the patient service revenue, and you can see we have 5 million. Sorry, this is patients not receivable, but they are asking for net patient service revenue. So patient service revenue, and we can see that we have patient service revenue of 5 million. Then patient service revenue is for 3 million, and we have patient service revenue of 1 million. That's it. So we have patient revenue 5 and 3 8 and 1 9. So we have a total gross patient service revenue of 9 million, and from this we are going to subtract the contractual adjustment, and the contractual adjustments are 1.5, and what else, 1.5, and then we have 0.25. We have page provision for 1.5. Let me change the color. We have provision for contractual adjustment 1.5, and then we have 0.3, that makes 1.8, and then we have 0.25. So 1.8, and so that means it will be 2,050,000. So the net will be 9 million minus 2.05, and then 2.1, and plus we have to also go for this charity provision of charity of 1 million. So the total will be 3.05. So 9 minus 3.05 will be 5.95 million. So the net patient service revenue will be 5.95 million. 5 million and 950,000. Next, let us solve an exercise on recording journal entries in case of receipt and use of contributions by a not-for-profit hospital. Now, Ellen Fack Hospital, a not-for-profit hospital, had the following transactions during the year ended December 31. Prepare journal entries necessary to record the transactions. The hospital does not use fund accounting. Now, Joseph, a high school senior, donated his services to the hospital for an entire summer, serving food for patients and performing general tasks. So you can see he's serving food and providing a general task, so they don't need any specialized skills. If paid for, these services would have cost the hospital 8,000. So these services, since they do not require any specialized skills, so we are not going to report them in the financial statement, even if the hospital would have paid the $8,000 had Joe not provided these services. So we are not going to record in our financial statements. Let us go to the second transaction. D. Bean donated 20,000 to the hospital, stipulating that the resources be used only to resurface its parking lot, a maintenance function that the hospital perform every 3 years. So they are receiving 20,000. So cash is debit by 20,000, and temporarily restricted support contribution is credited by 20,000 because they can use this money only to resurface the parking lot. Then the hospital used D. Bean's donation for the stipulated purpose. So they are using this money for the purpose it is stipulated. So first of all, we are going to reclassify temporarily restricted asset reclassification into unrestricted asset. So temporarily restricted asset reclassification out is debit by 20,000, and unrestricted asset reclassification is credit by 20,000. And since it has been used for the stipulated purpose, so we are going to record this as parking lot expense debit and cash credit. Then J. Blythe as estate donated 500,000 to the hospital to help pay for new MRI equipment. So they are receiving 500,000. So cash is debit. But since this money can be used only for buying a new MRI equipment, so that's why this is temporarily restricted support contribution credit by 500,000. Then the hospital use donation for the new MRI equipment. So once again, the temporarily restricted asset has to be reclassified as a unrestricted asset. So temporarily restricted asset reclassification is debit by 500,000, and unrestricted asset reclassification in is credit by 500,000. And since they have used this money to buy the MRI equipment, so equipment is debit and cash is credit. Next, let us solve an exercise on how to generalize transactions for patient service revenues. Now, the Maggie King Hospital, a not-for-profit hospital, had the following transactions. The total services provided by the hospital to all patients during the year amounted to 19 million. So, patient account receivable is going to be debit by 19 million, and patient service revenue is credited by 19 million. Then transaction 1 includes billing to Medicare for services to program beneficiaries at prospectively determined rates. Under this program, contractual adjustments to the predetermined rate were 1.5 million. So once again, so we have provision for contractual adjustment debit by 1.5 million, and patient account receivable is credited by 1.5 million. Then we go to number 3. Transaction 1 also includes billing to third party payer X under an agreement that calls for retrospective final rates. Interim billing rates under this agreement resulted in contractual adjustment of 1 million. So once again, there is a provision for adjustment, for contractual adjustment, and this is going to be for 1 million debit, and patient account receivable credit by 1 million. The hospital provided charity care included in transaction 1 valued at 500,000 at the established rate. So once again, this is provision for charity care, and this is 500,000, and patient account receivable is credited by 500,000. Then the hospital made a provision for bad debts. So they are making, so that means we have bad debt expense debit by 300,000, and allowances are credited by 300,000. Then the hospital collected 13.5 million from third party payers and direct pay patient. So cash is debit by 13.5 million and patient account receivable is credited by 13.5 million. Then the hospital also wrote off bad debts of 200,000. So allowance are debit by 200,000 and patient account receivable are credited by 200,000. Then the hospital estimate it would need to refund 100,000 to payer X in transaction 3 when retrospective rates are determined. So provision for contractual adjustments are debit by 100,000 and estimated third party payer settlement is credited by 100,000. So these were the journal entries that we were supposed to prepare in this transaction. And then the next they are asking is the amount of the net patient service revenue. So first of all, we are going to look into the total net patient service revenue that is there. Uh, so we have the patient service revenue, and you can see we have a credit of 19. Then uh, what else do we have? So you can see that we have the gross patient service revenue of 19 million, and from this we are going to subtract the contractual adjustments, and the contractual adjustments are the provisions for contractual adjustment 1.5. Then we have 1, and so that makes 2.5 and 0.1. So 1 2.5, that makes 2.6. And in addition to this we have a contractual adjustment for charity care of 0.5, so that makes 3.1. So 19 minus 3.1, and this will be how much? uh, 15.9 million. So the provision for the net patient service revenue will be 15.9 million. Next, they ask for the amount of net patient accounts receivable, and let us see how we calculate that. Now, the net patient account receivable, if we let us see first of all how much is the gross patient account receivable, and we can see that we have 19. And then net patient account receivable, is there any other? Okay, and then from this we have patient account receivable 1.5. Then we have credit 1 million, then we have 0.5, then we have 13.5, and then we have 0.2. So that makes 16.1. 16.7, sorry, 16 17, yeah. And so the balance in patient account receivable will be 0.32 million 300,000. 19 minus 16.7, that will give us 2.3 million. Now, in addition to that, we can also see that there is allowances for uncollectible, and the allowances for uncollectible, uncollectible, we have a credit of zero point 0.3, and we have a debit of allowances for uncollectible 200,000, that makes 0.2. So we have a balance of 0.1. So 2.3 minus 0.1, that will give us 2,200,000. So the net patient account receivable will be 2,200,000. We can see that the gross patient account receivable is 2.3, and then we have this allowances of 2,300,000. And from this we have to also subtract the allowances of how much, 0.1 as well. Okay. Next, they are, so the net patient account receivable is 2.2. Then we have to determine the estimated third party payer settlement. How the third party settlement, how the settlement should be reported, and how charity care should be reported. So the estimated third party settlement was, if you can see, it was 100,000. Estimated third party settlement was 100,000, and this will be obviously reported as a liability, and the amount of charity care provided should be disclosed in the notes, that is based on estimated direct and indirect cost. Finally, let us solve a comprehensive exercise on generalizing, posting, and preparing the trial balance and the financial statement, and that will give you a very comprehensive understanding of recording of transactions for healthcare organizations. So, Court Hospital was established as a not-for-profit organization on January 1, that to take over the assets of an existing hospital. The hospital does not use fund accounting required. This is what we are required. Use the information given below. Prepare the necessary journal entries. Prepare a statement of operation, a statement of changes in net assets, and prepare the balance sheet. So the hospital sold revenue bonds in the amount of 40 million. So they have sold the revenue bonds. So revenue bonds are debit by 40 million. The hospital received 38 million in cash. So cash is debit by 38 million. And what else? To provide security for payment of the debt, the other 2 million were deposited in an escrow account with a trustee. The trustee immediately invested the cash in US Treasury bills. So this is the cash that is held by the trustees. So cash held by trustee is credited by 2 million. Okay, we go to transaction number 2. The physical assets of existing hospital were purchased for 35 million in cash. They are buying it for 35 million in cash. So cash is credited by 35 million. The appraised value of the asset were as follows: land is 3 million, then we have building 28 million, and equipment is 4 million. So 28, 32 plus 3, and that's how the cash has been paid, 35 million. Then the hospital provided services of 20 million at its established rates to Medicare patients. Its agreement with Medicare provided for contractual adjustment of 30% against the established rates. By year end, the hospital has collected 12.5 against the billings. Okay. So first of all, we are going to receive uh, the receivable is how much? 10 million. Number 3, 20 million. Let me clean up. So the hospital is, they are going to receive 20 million. So patient account receivable is debit by 20 million, and patient service revenue is credited by 20 million. And you can see that the contractual adjustment of 30% against the established rate. So 30% of 20 million is 6 million. So provisions are debit by 6 million, and patient account receivable is credited by 6 million. Then the hospital has collected 12.5 million, so cash is debit by 12.5 million, and patient accounts receivable is credited by 12.5 million. We move on to number 4. The hospital provided services of 10 million. Number 4, 10 million at its established rates to patients by a third party. So once again, patient account receivable is debit by 10 million, and patient service revenue is credited by 10 million. Then its agreement with the third party provides for contractual adjustment of 20%. So 20% of 10 million will be 2 million. So provisions are for contractual adjustment 2 million, and patient account receivable is credited by 2 million. It also provided for a retrospective adjustment based on a cost submission by the hospital 30 days after the end of the year. Okay, by the year end, the hospital has collected the entire amount. So you can see that the amount was 80 million. We have a provision of 2. So that means they have received 8 million cash, and patient account receivable is credited by 8 million. When it prepared its financial statement, the hospital estimated that it owed a third party 80,000. So once again, this is a provision for 80,000. Point 8 is debit, and estimated third party settlement is credited by 80,000. The hospital provided services to members of an HMO at rates per member per month, receiving cash premium totaling 15 million. So cash is debit by 15 million, and this is a premium revenue. So we are going to record this as a premium revenue. Number 6, the hospital provided care to charity patients amounting to 2 million at its established billing rate. It estimated the direct and indirect cost of that care to be 1.4 million. So first of all, we are going to have a receivable of 2 million and patient service revenue credit, and then we are going to make a provision, and the provision is going to be 2 million again, and not 1.4 million. Okay. We move on to transaction number 7, and in transaction number 7, the hospital provided care to self-pay patient in the amount of 5 million at its established rate. So patient account receivable is debit by 5 million, and patient service revenue is credited by 5 million. The hospital collected 2 million against these billings, so they are receiving 2 million. So cash is debit, and patient account receivable is credited by 2 million. Then At the year end, the hospital established an allowance of for uncollectible. That means there is a bad debt, receivables of 40% of the remaining amount due from the same patient. So the amount due is 5 million minus 2 million, that is 3 million. And on this, we have to calculate 40% for the allowance. So 40% of 3 million will be 1.2 million. So bad debt expense are debit and allowances for uncollectible are credit. The hospital had the following functional expenses. Of the amount shown, 29 million was paid in cash. So we are paying 29 million in cash. Depreciation on building and equipment included in the each function was 1.4 million and 600,000. So 1.4 million and 600,000. We have healthcare for 22 million. Then we have dietary services for 4 million. We have maintenance expenses 2 million. And then we have administrative expenses for 3 million. So that's how we record transaction number 8. We move on to transaction number 9. The hospital paid a debt of 4 million on its bond payable. So we are paying 4 million. 1.6 million in amortization of the principal amount. So revenue bond payable is 1.6 million and 2.4 million in interest. That is the balancing figure, and that's how the equation we record this transaction. It also made an year-end journal reclassifying 1.6 million of long-term debt current as current. So obviously it has to be reclassified. So revenue bonds payable is debit by 1.6 and current portion of revenue bonds payable is credit by 1.6 million. Then the hospital recorded accrued expenses at year end as follows. We have healthcare for 2 million. So healthcare is debit by 2 million. Then administrative expenses are 500,000. So the total accrued expenses are 2,500,000. Then the hospital paid 1 million for a claim made policy for medical policy malpractice insurance through December 31 because the policy did not transfer the risk to the insurance carrier for incurred but not reported claims. The IBNR incurred but not reported claims. The hospital accrued 300,000. Okay, first of all, we are going to record uh, uh, 1 million over here. So the healthcare is for 1 million and cash is credited by 1 million. Okay, then we are going to have a payable of 300,000. So healthcare services are debit by 300,000 and we haven't paid. This is payable. So claims payable is credited by 300,000. Then the hospital received a check from the trustees for 100,000. So representing earning on the investment made by the trustee with the escrow money, the investment income is available for the hospital's general operation. So we have received 100. So cash is debit by 100,000 and unrestricted revenue is credited by 100,000. We move on to number 13. The hospital received equity securities from a donor who specified that the securities, together with any earning thereof, be used for the purpose of upgrading the hospital building. The security had a fair value of 250,000 when the donor made the gift. So this is a long term investment and there is a restriction. So long term investment is debit, restricted for capital acquisition because they can use it for upgrading the hospital building for 250,000. Okay. Uh, then during the year the hospital received dividend of 10,000, so cash, and obviously this money can be used only for upgrading the building, so cash that is restricted for capital acquisition is debit by 10,000, and temporarily restricted revenue is credited by 10,000. Uh, then at year end, when the hospital prepared its financial statement, the securities had a fair value of 270. So there is an increase of 20,000. So long term investment restricted for capital acquisition is debit by 20,000, and temporary restricted net realized and unrealized gain and losses is credited by 20,000. Then during 2013, the hospital created Court Hospital Foundation, whose sole purpose is to obtain donation for the hospital. At year end, the foundation advised the hospital that it had received cash donations of 300,000. So interest in net assets of Central Hospital Foundation is debited by 300,000. And let us see what else happens. Of this amount, 50,000 was unrestricted, so this is 50,000. 50,000, that means 0.05. 50,000 for upgrading at the hospital request, the foundation set up the 50,000, and 250,000 was restricted for upgrading the hospital equipment. So again, this is a temporary restriction, and this temporary restriction is for 250,000. Then at the end of the year, at the hospital's request, the foundation sent the hospital the entire 50,000 of cash. So cash is debited by 50,000, and 50,000 will be 0.05 in our case. 0.05. And interest on net assets of Central Hospital Foundation is credited by 50,000. Okay, so that is how we are going to record all these journal entries, and let us see how we are going to post them into the ledger. Now obviously at this level of learning, you know very well how to prepare the T account, so I am just going to go show you for one, and you can see that we have cash, and cash over here is 38 million. Then we have cash held by trustee. Obviously we are not going to record with the cash, we are going to have a separate account for that. Then look at what other cash do we have. Um you can see that there is a payment of 35 million. Then we have 12 million and 500,000. What else? Then we have cash 8 million. Then we have cash for 15 million, and then we have cash for 2 million. Then we have cash, and that is credit by there is one more cash here, that is 29 million. Then we have cash 4 million, and then there is credit for cash by 1 million, and I think there is no other cash that can be, obviously this is cash restricted for capital acquisition. And then finally we have cash in the end for 50,000. So now if you calculate, is there anything else left? Oh, there is one more cash over here, so let me clean up this part. This is 2, and this is going to be 100,000, and then we have 0.05. So we can see that if you make the balance will be 6,650,000. Rest you can definitely you can make the T accounts for all the accounts that are here, and you know how to, I'm sure you may be knowing how to have the balances for each account. So all the journal entries for all the accounts, there is a T account, and I have put them over here for your convenience. I would advise you that you should do this exercise on your own if you want to have a solid understanding of this exercise. But having said that, just to save my time, I am not going to solve this T account at this level of your learning. Once we have done the T accounts, we are going to prepare the trial balance, and all the balances that are there for the T accounts are recorded over here, and these are the T accounts. You can see we have cash, we have, there is no balance for cash held, but then there is a revenue, bonds payable 36,800, and you know that when we prepare the trial balance, the total of debit must be equal to the credit. That is a mathematical verification of our answer. Next, they are asking us a few more things, and let us see what are those. We have to prepare the necessary journal entries we have recorded, and then we have to prepare a statement of operations, and this is going to come from the with the help of the trial balance. So we have the trial balance, and from here we are going to determine the net pay, the statement of operation, and we start with net patient service revenue, and you can see that the net patient service revenue will be how much. uh, we have 37,000 minus 80, and what else, minus provision of 2 million, so we will be having 26,920. Then we have the premium available, and the premium revenue, and the premium revenue is 15 million. So let me clean up. So we have the net patient service revenue, and net patient service revenue is 37 minus the two provisions, 8 million and 80,000 and 2 million, that is 26 million and 920,000. Then we have premium revenue, and the premium revenue is 15 million, and the total revenue will be the summation of the two, that is 41,920,000. Then we have the expenses, and the expenses are 25,300, 25,300,000. Then we have 4 million, then we have 2 million and 3,500,000. And then to this we have the interest expense of 2.4. And what else, we have the bad debt expense of 1,200,000. So the total is going to be 38,400,000. So the operating income will be the total revenue minus these expenses, so that will be 3,520,000. To this we are going to add the other income, and the other income is, you can see other income is 100,000. So 100 is 0.10, and the excess will be now 3,620,000. To this, we are going to add the change in interest in net assets of Central Hospital Foundation, that was 50,000. So that will be 0.05. So this is the increase in unrestricted net asset is 3,670,000. Next, we prepare the statement of changes in net assets. So first of all, we record the excess of revenue over expense, and excess of revenue over expense was 3.62, 3,620,000. Now to this we are going to add the changes in the net interest, net assets, net assets and changes, I made a mistake. Actually this is 0.05 is interest in net assets. This is over here. And changes in interest is here. They are the same value, 0.05. Okay. So the total is 3,670,000. Then we have contribution, temporary restricted support contribution of 250,000, that is 0.25. Then we have the investment income, and the investment income is for 10,000. Then this net realized and unrealized gains on investment is 20,000. You can see over here is 20,000, 0.02. Let me clean it up. Zero contribution is 250,000, and then investment is how much? 10,000, so that is 0.01. And then we have the net realized and unrealized gains of 20,000, so that is 0.02. And then we have the changes in interest in net assets of 250,000, that is 0.25. So contribution of equipment acquisition is 250,000, and changes in interest in net assets of Central Foundation is also 250,000. So this will give us the increase. So we will add up these together. So the increase is equal to how much? 530,000. So the total increase will be the increase in the unrestricted plus the increase in the temporarily restricted. So that will give us a total of 4,200,000. Net assets at the beginning are 0, so the net assets at the end of the year are going to be 4,200,000. Finally, we are going to prepare the balance sheet, and we can see we have to seek some information from the TAT balance, and you can see that the cash is 6,650,000. Sorry, 6,650,000. And then we have the patient account receivable, that is 4,500,000, 4,500,000. Then we have the allowances of uncollectible, and the allowances of uncollectible is how much? 1,200,000. Let me clean it. Allowances for uncollectible is 1,200,000. We have cash 6,650,000, patient account receivable is 4.5 million. Then allowances for uncollectible is 1.2 million. So this is a total of 3 million and 3,300,000. So that gives us total current assets of 9,950,000. Then we are going to have the interest in net assets of Court Hospital Foundation, and you can see that we have a total of interest of 300,000, and from this we are going to subtract the 50,000, that makes 250,000. 250,000, it makes 2.50. Okay, then assets that are limited in use, there we have the amount held by the trustees, that is 2 million. Then cash and investment restricted for capital acquisition, and you can see restricted for capital acquisition is, you can see 270,000. And then what else? 270 and restricted for capital acquisition, so that makes 280,000. So that makes 0.280. Then we have the property, plant and equipment, and under property, plant and equipment we have land, and land is for 3 million. Land is for 3 million. Then we have building, and building is 28 million. We have 28 million for the building, and from this we will subtract the accumulated depreciation on building. How much is it? Accumulated depreciation is 1.4 million. So this is equal to how much? 26,600 million. Next we have the equipment, and the equipment is for 4 million, and from this we will be subtracting the accumulated depreciation on equipment, that is 600,000, 0.6, that gives us 3.4 million. And now we can make the total, and the total will be 45,480,000. Then we will look into the liabilities, and the liabilities are accrued expenses payable, and accrued expenses payable are how much? Current portion of revenue, current payable is 1. Where accrued expense payable is 2,500,000. 2,500,000. We have 2,500,000. Then we have claims payable, and the claims payable are how much is the claims payable? Claims payable are 300,000, so that makes 0.30. Then we have current portion of revenue bond payable, and revenue bond payable is, let me clean up again, is 1.6 million. And then we have estimated third party settlement for 80,000. So the total current liabilities are 4,480,000. Then we can see the long-term debt, and for this we have the revenue bonds payable 3800 million, so 36.800. Then we have the net assets, and these are unrestricted, and we can get the unrestricted from here. Increase in unrestricted net assets, that is 3.67. 3 point unrestricted is 3.67. Then we have the temporarily restricted, that was 530,000. 0.53. So if we make the total, so the total net assets are 41 million, and the total now is 45,480 million. We make the total, and you can see that the two totals are equal. That means mathematically we have made the question, solved the exercise correctly. And this completes the second video on accounting for healthcare organizations. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.